To my YouTube channel. Today we are going to simplify the concept of share forfeiture. Many of you have written to me that you're finding it difficult how to pass the journal entries for forfeiture. So let us simplify this concept and understand the journal entries for share forfeiture and other concepts. So I'm going to make a series of short videos where I will be focusing on only one part in one video, so you can revise it multiple times. So today's video is dedicated to only share forfeiture, simple forfeiture where there is no premium, no pro rata. So basically share forfeiture is cancellation of the shares for the shareholders who failed to pay certain amount of money either on allotment or on the calls. So here we cancel the share and we write share capital account debit. Here for the first time we are debiting share capital account. Otherwise all this while when you pass the entry for share application, when you pass the entry for allotment and all, you were writing share capital on the credit side, but here we are debiting it. Here we will credit two things. This is share forfeiture. What is share forfeiture account? I will explain. Share forfeiture account, and one more thing you are crediting is calls in arrears. Now understand what are these amounts with which we are going to debit or credit these entries. So first thing, share capital account. It will be debited with called up value. What is the meaning of called up value? Called up value means there is a possibility that company has forfeited the shares just after the allotment money. Okay, means the directors did not wait for the final call, first or final call, and after the allotment when the shareholder failed to pay the allotment money, his shares are being forfeited. In such case, called up money will be lesser than the face value of shares. So if the face value of share is 10 and till the allotment only 5 rupees is being called up and the shares are immediately forfeited, we are going to write 5 over here. Now what comes under share forfeiture? Under share forfeiture you write amount received from the shareholder. Amount received means actually how much the shareholder has paid. So if the shareholder has paid application and allotment money, we are going to write it here. If the shareholder has paid only the application money, we will write over here. Then comes calls and arrears. Under calls and arrears we write amount not paid. If the amount is not received from the shareholder, that pending amount is written over here in calls and arrears. I hope you understood. Now let us take an example, and with the help of example we will pass the same entry. So let's say there is a shareholder holding 100 shares and the face value of shares is rupees 10 per share, being called as rupees 2 on application, rupees 5 on allotment and rupees 3 on first and final call. If this is the case, and let's say shareholder has paid 2 rupees in application and 5 rupees in allotment but failed to pay the final call and his shares are being forfeited, then in that case what entry will pass? We will be passing this entry only. Okay, so over here what I am going to write, called up money. Called up money is 100 multiplied by all 10 rupees is being called. So I am going to multiply it with 100. I am going to write 1000 rupees. Amount received, how much amount is being received? We have received 2 plus 5, 7 rupees is being received on his 100 shares. So multiplied by 7, we will write 700, and amount what is not received is the last call is of rupees 3. So we are going to write over here 100 multiplied by 3, 300 rupees. Okay. So I hope you understood how to pass the journal entry in this case. Now let us take one more example where we will see if the shares are being forfeited without calling up all the money. Okay, so let me take one example. Let's say again there is share is of 10 rupees and number of shares are 100. Company has 2 rupees on application, rupees 5 on allotment, and same like previous example, rupees 3 on first and final call. Now this time let's assume the shareholder has paid only rupees 2 on application money. He hasn't paid this rupees 5 and rupees 3. Means 8 rupees is not being paid. In that case, we will let's say company has forfeited his shares. Let me make a little change over here. Let's say company has forfeited his shares here only after the allotment and the final call is not being called from him. In that case, what will be the entry? The entry will remain same, only the figures will change. Share capital account will get debited, but this time we will not write 100 multiplied by 10 because company has called only till here. So 5 plus 2, with 7 rupees we are going to debit share capital, and in share forfeiture obviously we will write the amount being paid by the shareholder, and this time shareholder has paid only 2 rupees. So you are going to write 100 multiplied by 2, 200, and what is not being paid by shareholder is calls in arrears, and calls in arrears is 100 multiplied by 5, that is allotment. So this is 500, 5 plus 2 7 and 7. Okay, so this is a case where we pass the entry for forfeiture of share in case of fully called up share and in case of partly called up shares. I hope you understood. Now in the next video we will be discussing about reissue of the shares. Till then, bye, have a great day.